All right. Okay, so we should be all set. We'll just give it a quick minute here. Good morning. Good morning. Okay, so we'll get after it. So, good morning, everyone. This live stream I have been super excited for. This risk management tool I've been working on for a while. It has been quite a journey and making it, and it is not yet finished. So today we're going to go over it. If you guys do not understand some of the terms that I'm using when talking about risk management, take the time to hit Google and research these things, because if you have ever consistently lost money or blown up your portfolios, this is why. It's because you don't have a good concept of this, of risk management, of position sizing, of how much you should be risking per trade, of risk reward ratios. These kinds of things are put into place to keep you consistently growing your account rather than watching yourself grow it over a week's time or 2 weeks or even a month or more just to blow it up over one or two trades. So again, if you don't understand some of the terms I'm using, please take the time to Google them and research them. But other than that, I am super excited. So without further ado, let's dive in here, okay? So let's look at this trade example here. So let's say that I want to long the bottom of the channel here with my stop loss below this low, okay? And I'm going to long it to the top of the channel. So my risk reward ratio on that, as you can see here, is 3.8. So typically with risk reward, you would like to have it over 2, right? And I'll kind of show you. So if it's at a 1-to-1, and let's say your total risk amount is $200. So you're risking $200 here to make $200 here. If your risk to reward ratio is 2, you're risking $200 here to make $400 here. If your risk reward ratio is 3, $200 to make $600, and so on and so forth. So this is a good risk reward ratio, 3.8, right? Now here's what's a little bit unrealistic with this risk reward, is that it's very likely that when you open your position up here, you're not going to hold it all the way up here and then take profits. No, you're going to take profits at the midpoint, and you're going to take profits up here, and you know, along the way, right? So it's not exactly this trade, even though you're taking a trade that's a 3.8 risk reward ratio, you're actually taking a couple different trades, right? You're doing one that is if we set this to be the same here, you're doing one that is 1.8 risk reward ratio, and then you're doing the one that's 3.8 with, after you take profits here, right? So you're doing a couple different trades. So we'll start here. We're going to take this example. Our entry is, let's say, 23,080. I'm just going to write this down. So it is 23,080. Our stop loss is 22. I'm just going to hide this one. 22,740. 22,740. Okay. And now here's the thing, right? I'm planning this trade ahead of time. I know what my entry is going to be ahead of time. I'm not watching price and randomly entering and saying, oh, this is the 618 here. I think I'm just going to like enter here and I'll write it down and see how far I can get. That's not what I'm doing. I know exactly what my entry is going to be, and I know exactly what my stop loss is going to be before price even gets there. So I'm going to wait. I'm going to set an alert here, right? So I get the alert on my trading view. If I see price go like this and it finds some support and it's holding here, I'll say, okay, I'm going to enter my long position here with my stop loss here below this low and trade up to the top of the channel with my take profit here and here. That's my plan. Okay. So we have our entry and our stop loss. So let's go to the trading tool. So we can see here I already have some trades entered, right? I just wanted to throw in some examples here. So we have some data to look back on, right? Some stuff that we can look at. So here's how it works. You only have to enter in orange here your starting balance and your set risk. Your set risk should never be more than 5%. As a matter of fact, if you're new to trading or you're starting out with trading, just honestly trading in general, your risk should be 2% or lower per trade. Okay? I would recommend starting at 1, but for this example here, let's say we have a starting balance of 10,000 and we set our risk to 2%, okay? So we go in here and we say today is the 2nd of, nope, it's the 3rd, I'm sorry, of February. We are trading BTC. We are looking at a long trade. Our entry is 23.80 and our stop loss is 22.740. Now, I would enter this on the condition of saying, like, you know, I anticipate taking this trade. It'll likely be coming up soon, right? So, and we can see here that we've already had some trades before. So I just want to backtrack for a moment here. Yeah, so here's the thing. We have our starting balance here, right? Our risk is 2%. On our very first trade here, right? Our opening balance was 10,000. Our position size was 9,400, and I'll talk more about this number. And our risk was $200. Okay, how did we come up with that $200? Well, it's 2% of 10,000. So now we can see that our risk is now $257 because our balance is now 12,862. Because why? We've made some profits. All right. So we can see I've like I said, I've added some random numbers here just to have them going. So what have we done here? We've put in our date, our asset, our trade, long or short, our entry, and our stop loss. Our opening balance is here. So 2% of our opening balance today, as I'm about to take this trade, is 12,862. 2% of that is $257. So what that means is that I can take a $17,462 position. And now you're going to say, Emlock, I don't have that much money in my account, and this is where leverage comes into play, right? So you would use leverage to get, you know, this amount here, right? However you would want to do it. You could do like, you know, $5,000 at 3.2 leverage or whatever it might be, okay? So let's we're going to go back to BTC here, the BTC chart. Keep in mind, right, this risk $257, okay? Now what that means, keep these two figures in mind, 17.5, okay? And 257. What that means is that here at our entry at 23,080, like we said, I'm going to open a $17,500 position with my stop loss here at 22,740. Now, if I get stopped out, this amount I lose is $257. Okay? See, if we get stopped out here, I lose $257, right? Just like this, right here, $257. This is my position size. So what this does for you is it automatically calculates your position size, the amount that you're going to be risking for that trade, okay? Now, let's say that this trade, you know, we said the very first one was 1.8, so it's about 2, and then the rest would be a little bit higher. So, you know, this was the 1.8 because we're going to take profit at the mid-range, and then we'll take profit up here as well. So let's just say from this trade, if it was about 2 here, we made double. Let's just say we end up making, you know, we called it great on this trade. Let's just say that we end up making our P&L, we put in $100. Okay, and then win-loss, we put a 1 for a win. So now we can see here we've entered our date, asset, trade, entry, and stop loss. We have our opening balance here. This gave us our position size, the amount that we're going to risk for that trade. Now that we've put in our P&L, that we made $600 on this trade, we know that our risk reward was 2.3 on this trade total, which is good. That's right about what we want to see, is above 2. And we profited 4.66% on that trade in total. So from here we can go up and we can say, well, over the course of 18 trades since January 23rd, I've profited about 35%, total P&L of about $3,500 with an average risk reward of 1.78. And you can see this figure and you can say, this is a little bit low. Maybe I'm taking profit too soon. Maybe the trades I've been taking, I want to look for trades that I want to try to get this closer to 2 is what I want to do, right? So like this one we had above 2.3. This was a good trade. This one was 1.23. This one was 1.2. This one was below 1.2. Like these trades, I should go back and look at my trading journal and say, well, why was I taking profit too early? What was going on with these trades? This was a little bit low, right? And then we also have our win to loss ratio at 66%. And so this is just really great, right? This gives you kind of all of your trading statistics here. And all you have to do, like I said, entering all of this data here. I'm going to try to automate a couple more things, but we'll come back to that. So if you can see what's going on here is that this gives you the amount that you're going to risk every single time. This gives you your position size. And if you follow these figures every single time based on what this puts in here for you, every time, it is impossible to blow up your account because you'll only ever lose $257 here. You'll only ever lose 2%, right? So let's look at this. Our opening balance here was 10,000. Risk was 200. We made 200. That's an okay trade. It's a 1-to-1 risk reward ratio. We want to go for 2. So on our second trade here, our opening balance was 10,200 because we made the $200. We risked 204. See how our risk went up because our account balance went up, right? So now we're risking 204, and we made 408. Great. That was a 2 risk to reward ratio. Great. Awesome. We go to our next one. Our account balance is now 10,608. Okay. So we can risk 212. All right. We can risk 212 now because our account balance has gone up, and we lose this trade. But what did we lose? We just lost 212. Okay, so guess what? We're still in the green. Okay, so if we go to our next one, our account balance is lower than yesterday's, but look, it's still above our opening balance, even though we lost. Right? As a matter of fact, you could take 2 more losses and you would still just be at your opening balance. So using this process is what allows for your portfolio to keep growing rather than blowing it up, right? Let's move on to the next. I have multiple sheets here. So weekly, we would say, all right, number of trades. Let's go week 1. Week 1, we had 13 trades here, right? We had these 13 trades. So we'll go over to our weekly. We'll enter 13. Our P&L for the week was about 2,200, right? 2,224. We set a 5% weekly profit goal, which will then tell you how much you should make that week, right? So this is kind of a good way to gauge, like, what am I looking to make each week? So you would say your opening balance is 10,000, and your weekly balance goal would be 10,500. Okay, because your P&L goal was 500. Obviously, this week, these were random numbers. This wasn't actually traded. I threw in some random numbers here. So obviously in this one, we totally blew it out of the park, right? It was totally insane. We made 22% profits. Maybe we caught some lucky trades. It was just way crazy. But we can see then, the next week we had 7 trades and we hit the 5% target perfectly. 9 trades the next week, and we hit the 5% target perfectly again, 642. And 11 here. And so if we were going to hit the exact one here, we would want to see that we enter, 708 for our P&L there as well. And, continuing on, so on and so forth. See, we're still, here's what's important to understand. We're still only targeting 5% a week, but that amount continues to grow over time. Okay, and this is how you grow your account. You're still only targeting 5%, but your account continues to grow because 5% is a larger number over time. Okay. So we're going to go on to monthly then, and we can say, well, this month, looking back on our weekly, we had 40 trades, right? 1, 2, 3, 4 weeks. We go to the monthly, we had 40 trades, and our P&L was, again, these are random numbers, right? We didn't actually trade this. We blew it out of the water. Once again, we're shooting for a 20% profit goal a month, which would give us a $2,000 goal here. We totally blew it out of the water. We made double that. And then for the following month now, our target is 2,830, right? So what's great about these weekly and monthly charts is, you're in here and you're putting each of your trades in and you're getting your data, but then you can go over to your weekly and you say, all right, how are we doing? Are we reaching my weekly goals? This helps give you realistic targets based on your portfolio size. Targeting 5% a week, I mean, even that is, it's not bad. That's pretty good to target 5% a week in profits, right? And 20%, this, may even be a little bit high, targeting 20% in profits a month, right? In doing this, it gives you realistic goals that you can set to achieve, right? Instead of just trading at random and not knowing, what to expect or what you're going to be looking towards, okay? So we have our daily, our weekly, and our monthly, and now we also have our portfolio. So here, any of the data that you put in here, so you put in your P&L every single day, you can go over to your portfolio, and this will show you for your first trade, your second trade, you had 200, your third trade, your fourth trade, fifth trade. This would be by your 12th trade, you had your portfolio up to here. And, now we're at our 19th trade and we have, a total portfolio balance of 13,462. So we've had a really nice, increase in portfolio. We can see a couple drawdowns here, but as we can see, those drawdowns were never significant enough to totally blow out our account because we're following our 2% risk rule, right? So I like having this portfolio graph here, just something visually to see how your trades are going. And it does automatically update based on what you put on here. Now, the final thing I want to show you guys, and this to me is like this is the big one, okay? This is going to help give you realistic expectations of what it's possible for you to make while trading. So, this to some of you may look a little bit confusing. I'll try to explain here. So let's go back to our daily. We have 18 trades. Okay. So let's go to, and let's say we just did 18 trades over the course of 1 month, for example. So we'll go back to our risk reward and we'll say 18 trades. Our starting balance was 10,000. Our set risk was 2%. Meaning our risk amount per trade would have been $200. And of course, this figure would change over time, right? So we go back to our daily and we say our win to loss ratio is about 66%, 67%. So we go over here and we can find 67%. So let's pull that over, right? 67%. Let's go back and we'll say our average risk to reward ratio was 1.8. Okay, so we're going to find this on the graph. 67%, we pull it over and we say our average risk to reward ratio is 1.8. So we should have made, about 3,100 that month, let's say. And look at this, we had about 34. So it was a little bit over even because these figures aren't exact, right? We're just estimating. But about 34. So yeah, this look how accurately we were able to do that based on this graph here, on this data. If we have a 67% win to loss ratio, and we take trades that are 1.8 risk reward ratio, then we should be making about $3,100 for every 18 trades, right? And if we take 18 trades a month, this is what we should be targeting a month. Okay. So I'm going to explain a little bit more about this and how cool this data is and this tool can be for you. So if you're starting out, and this is what's so great about this monthly and weekly charts here, is you can use this data and then input it in here. So let's say that you take 40 trades a month and you're starting at a 10,000 risk reward balance, and your average win to loss ratio was about 66%. So we'll do here, let's look at 1, 2, 3 deviations to the downside and to the upside. So 1, 2, 3, 1, 2, 3. So let's say, because not every month you're going to have the exact same win to loss ratio. So you can have your general average, which right now is 66, but for every month you're going to have, maybe one month is 58%, and then we have one month that's 73%, and then we have another month that we're following back into our mid-range, which is 66%. So this can show you, as you take trades, there's one thing you do not have control over. You don't have control over your win to loss ratio in trading. People think that win to loss ratio is everything in trading, and the more you win, the more money you make, and that is just a flat out lie. Okay? The one thing you have control over in trading is the risk reward ratio of the trades that you choose to take. Okay? So don't focus on your win to loss. You want to focus on your risk to reward. And here's how that works. So this can give you an estimate. If you take 40 trades a month on average, okay, so you can put 40 trades in here. Your starting balance is 10,000 at the beginning of that month, and you're going to risk 2% per trade. You can look at here and you can say, okay, I am only going to take trades at a 1.8 risk reward ratio. That means that throughout that month, if on average I fall between 58% and 73%, I should make between $4,800 and $8,200 that month. Based on my trading strategy, that is how much money I should make. If I only take one-to-one risk reward strategies, then I'll make between $3,600 and $1,200. Okay. Now here's what's interesting about this. We're going to take a step back and let's just say that your win to loss ratio, this is pretty good. Like to have a 58 to 73, 75. Mine typically, my risk to reward ratio is typically on average around, between 67 to 70%. So some months I can have up to 80, and some months I can be down to let's say 58. You're going to have a range. But let's just say that your win to loss ratio is between 40 and 60%. Okay, based on your trading strategy, let's say that your risk to reward ratio is, your win to loss ratio, is between 40 and 60%, okay? On average. So you went back to your monthly graph and you've looked every month, you've said, well, this month I had a 40% month, this month I had a 50% month, the next month I had a 60% month, and so on and so forth. And you see that over the course of a year, each one of your months falls between here and here and here, okay? So somewhere in this range, right? So you can say, well, I want to know how much money I should be, how much money I could expect to make. My rent cost, my mortgage or my rent cost, $2,000 a month, let's say. All of my bills in total are about, let's say your bills in total are $2,500 a month, just for argument's sake. Let's say they're $2,500 a month is how much you want to make just to afford your bills. So you'd like to make $500 more than that for a little bit extra spending. So let's say you want to make $3,000 a month. Okay, that is what you have to make. It's your bare minimum to survive, and everything after that, great, you can save for your future and XYZ. So you can look in here and you can say, well, I can't control my win to loss ratio. I've noticed that it's been between 40 and 60%. But what I can control are the trades that I take. So if I take trades that are a 1-to-1 risk reward ratio, and I have a 40% month, well, I'm going to lose $1,600. That's not going to work. If I take trades at a 1.2% risk to reward ratio and I have a bad month, I'm going to lose about $1,000. So that's not good either. So here I can see I have to take trades that are 1.5 or above just to break even on the month. Okay, so that's number one. If I match my worst month at 40%, and all my trades are 1.5 risk to reward ratio, I will break even. So that's where I have to start. I have to take trades that are at least 1.5 risk to reward ratio. And then you can go on to 1.8. You can say, well, here's the thing. If I take 1.8 risk reward ratio and if I lose, listen to this. Listen, people are so obsessed with not losing trades. But watch this. Watch this. If I lose 60% of my trades, but all those trades are at a 1.8 risk to reward ratio, I will make $1,000 that month. How crazy is that? By following this trading strategy, by following this risk management, if you lose 60% of your trades, you can still make $1,000 a month if you have a 1.8% or if you have a 1.8 risk to reward ratio. People are so obsessed with not losing trades, but here's the thing about trading. You're going to lose. Losing is a part of trading. It happens all the time. It's not uncommon. But here's the thing. If you lose, listen to this. If you lose only 40% of your trades, but still think about that number. That's a massive 40%. If you lose 40% of your trades, but all of your trades are at a 1.8% risk to reward ratio, you would make $5,400 that month over the course of 40 trades. Think about that. That is insanity. You're telling me that I can lose 40% of my trades, but my portfolio will go up by almost $5,500. That is insane, right? People think that you have to have a win-to-loss ratio of 90% to do that. Well, no, you don't. That is just not true at all. You do not. So let's go on to a 2 risk-reward ratio, which is typically what you would want to shoot for. If you have a 2 risk-reward ratio and you win 50%, you win just half. If you have half of your trades be successful, you will make $4,000 that month over the course of 40 trades at a 2% risk, starting with $10,000 at a risk-reward ratio of 2. You will make $4,000 that month. Think about that. How crazy is that? Right? So the whole point that I'm trying to get across here, you're not going to win all your trades. You cannot control how many trades you win or lose. Okay, the best thing you can do is to take high probability trades that you have taken in the past that you know have worked, because you keep a trading journal, right? You follow through with it after a whole day of trading. You open up your journal and you track the trades that you took, and you say, this went well, this did not go well. Okay, I'm going to do more of what works. All right, so you have your trade setups. You know that channel trading works, that the 618 trading works, that wedge trading works, etc., 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 right? And you say, okay, I'm going to keep doing more and more of what works. So, nonetheless, your win-to-loss ratio after month is going to be different. Some months you'll win 60%. Some months you'll only win 40% of your trades. But guess what? If each and every one of your trades has a risk-to-reward ratio of 2, no matter what, even if you lose 60% of your trades, you'll still make money that month. Okay? It sounds insane. But the reason this is possible, if we go back to our daily sheet here, is because we follow this system. Every day we go in, we enter our date, our asset, long or short. We put our entry in, our stop loss. We have our opening balance here. 2% of our opening balance that day is $257, and that is the amount that we're going to risk. Our position size based on our stop loss and entry can be $17,500. Using a little bit of leverage, we can take our $12,862 portfolio and we can make a $17,500 position on Bitcoin for a long trade at an entry of $23,080 with a stop loss of $22,740, only risking $257. And on this trade, we had a 2.33 risk to reward ratio, which is exactly what we're looking for, right? And we can, like I said, if we have consistent losers, so I'm going to put random numbers in here. If we have consistent losers look at what happens to our risk amount. Look at that. Our risk amount goes down, right? And we couldn't even lose this much. I totally misstepped. Look, you're only ever going to lose. So this one, let's say you lose 260. So 269, right? 264 would be your next loss. 264. 259 would be your next loss. If you want on an absolute losing streak, your next one would be 253. 253. The next one would be 248. Okay, the next one would be 243. The next one would be 239. Now look at this. We just lost 1, 2, 3, 4, 5, 6, 7 trades in a row. 7 trades in a row we just lost. Right? Let's go back. Let's enter in all these. Look, our losses, loss. Look at that. Our win-to-loss ratio is 57%. But look at our total portfolio. We are still up $1,600. Okay? Our portfolio balance is still higher than what we started with, even though we lost 7 trades in a row. No big deal. Now watch this. We come back and we're risking 234 to make. We want a 2 risk reward ratio. So what's 234 times 2? So that would be 468. So 468 we made that day. Right? And the next day we made, what would that be again? So 486. So 486. Right? And the next day we made, what would this be? So 506. Okay, these are all risking. This is what we want, the 2, right? And now look at what happened. Watch this. So here when we started losing, our portfolio balance was 13,500. Right? We lost 7 trades, which brought us down to 11,000. 11,600. Right? 7 trades we lost. It brought us down to 11,600 from 13,500. We won 3 trades with a 2 risk reward ratio, which is what we're shooting for, and our portfolio is already back right where we started. It's a little bit lower, but right where we started. See that? 3 trades made up for 7 losses because we're practicing proper risk management. Okay? So I'm going to end this video here. I want to keep it as short as I could because I genuinely want people to watch this. And I know sometimes if you see an hour-long live stream, it's a little bit intimidating, okay? So keep in mind, you do not have to have a high win-loss ratio to make money trading. You can make money trading winning 40% of your trades. Think about that. You can lose 60% of your trades and still make money every month with the proper risk management. Okay? Doing this will allow your portfolio to only go up. Let's look at all these losses here. Look at this. 1, 2, 3, 4, 5, 6, 7 consecutive losses. And look at this. 1, 2, 3 winners. And we're already back nearly to our portfolio all-time highs with just 3 winners made up for 7 losses. Think about that, right? It's crazy. So this tool is not yet released. I still have some editing and some things I want to do with it. This tool has been not easy to make. There's been a lot of work and a lot of calculation that went into this. I'm not reinventing the wheel here. Okay, this isn't, I didn't just come up with this. This is just proper risk management and trading. The thing that I did is I conveniently put it all in one simple tool that you can use, and all you have to do is put in 1, 2 numbers and then put in your trade information and your P&L, and the rest is calculated for you, right? You have your weekly here to keep track of your weekly, to give you an idea of what you want to make per week in terms of percentage, right? Same thing with monthly, keeping track of your monthly trades and what you want to make per month. your portfolio graph, and then the most important tool, your risk to reward ratio, to give you a good idea of what it's possible for you to make. This gives you realistic expectations on what you should be making with your trading following proper risk management. All right, so as I've said before, I am working on the new Memory Lock website. With that, we're gonna have a lot of cool stuff coming out, including this tool. So when we do, when I do move on to release that, this tool will come along with it. I don't want to give you guys an unfinished product. I want to give you guys, the very best and something that you can use that will make you a better trader. I maybe I'll release this pre-version just for you guys to mess around with, and we can do some some updating as time goes on. Otherwise, I would look to, I'm sort of shooting for March 1st to release everything Memory Lock, all the new branding and everything like that. So stay tuned for that. Thank you guys for joining me for this live stream. This one I very much have been looking forward to. I really hope that you guys took something from this. Okay, this is the most important thing you can do as a trader. And if this is something you're not doing or that you don't understand, you need to take the time to understand it, or otherwise you will continue to lose your money to the market. It's just how it works. Okay. All right. Well, enjoy the rest of your day, guys. I will be in the Discord. Other than that, enjoy your weekends, right? A weekend is the time to reflect on your past trading week and to prepare for the week to come. Stay tuned for this risk management tool. If you guys have any questions about anything that I went over today, please feel free to ask me in the Discord. I know I had some questions here, but I really want to keep this one brief. So if you have these questions, feel free to message me in the Discord or otherwise. So enjoy the rest of your day, guys. Thank you again.